As said, I will ask all presenters to just stand up so you are prepared for any question that must come in. And again, we have both the live stream opportunity through Slido, but also anybody that wants to ask a question here from the room are more than welcome to do so. I think we'll start with one on the Slido, and that's on North American online and retail. So can you please say a little more on social media strategy and influencers? Is this advertising channel only relevant to this division? Yeah, I think maybe it's for you, but also maybe Regis can elaborate.
Exactly. So it's absolutely relevant to the North America online and retail division. Influencers play a role because paid advertising through social media channels is prohibited. This is an area where we're increasing our maturity and we're already seeing benefits from doing so. But as Torben mentioned, it's also part of the North American branded division strategy.
So definitely not only Sarah's division, also my division. We actually diverted quite some investment funds to the social media strategy. What I said, cigarworld.com, every brand has their own platforms and Instagram, Facebook, websites. And on the influencer part, that is not only influencers that are on Instagram, but this is also like the shop clerks, for example, that influence in-store to get the consumers to our brands.
Sarah, please stay on stage here, because there is another one that is on the retail store expansion. So you mentioned the 2025 stores in a 5-year perspective. Can we count on this? And what factors would prevent this from actually happening?
Yep. 20 to 25 stores is our ambition over the next 5 years. And we'll deploy those in accordance with our capital deployment strategy as Marianne described.
Okay. Yes, please.
Yeah.
So maybe I think it's relevant to add on the stores that we constantly debate what is the real potential for the number of stores in the US, and nobody has an accurate number. As Sarah explained, we have a data-driven approach to find out what are the right locations, how far should we expand, and we'll do that based on the evidence that comes from the current stores. So what we said in the beginning is we built 4 test stores. You know, they've been set back a little bit due to COVID-19, but we're very confident that they're doing what we expected them to do. So now we're moving to phase 2, which is 6 to 8 stores in the next 2 to 3 years. In that same period, we continue to generate new potential venues. We keep refining our model for what makes a perfect store. And the current thinking is that the 2025 stores in the US at least is the potential that is there. But I think that 2-3 years from now, we'll be able to give you an even more precise number. And also, let's say, confirm whether all stores are doing as we expect them to do. We're being, how can you say, cautiously bold is maybe the best way to put it.
And maybe, Niels, you could stay on stage, because here are some more M&A related questions. So first of all, are you only planning to make acquisitions within cigars?
So Regis explained some of our thinking about moving into new geographies, be it Asia, be it South America. And I think we're at a stage where we're beginning to look at these geographies to figure out what are the right way to get feet on the ground. Because there's a big difference in these countries between, you know, covering with export sales versus having feet on the ground, generating local ideas, being able to influence local legislation to change excise taxes. We had an excellent example recently of where one of our employees went to talk to the EU around import duties on cigars. And as he was having the conversation, he was finding that they were very receptive. And he was asking them, why is there one rule for cigarettes and another rule for cigars? And the guy said, well, you know, they asked for a lower percentage, so we gave them a lower percentage. We never heard from the cigars. Right? So my point here is that there is lots of influence still to be had with legislators, also in Asia, also in South America. And today, most of the rules are not in our favor. But to really influence that in an effective way, we need to get local. And that's also where you could see potential acquisitions. But I think the question is also around, so would we go and buy something in an entirely new category? And as I said before, you can't rule that out, but it's not the playbook number one. We build on the basis of strength we possess, and if we can support them by acquisitions, we'll look at that. But I think it's way too early to speculate about us making any acquisitions outside of cigars. Cigars remain our core business.
But maybe, Niels, another way to kind of question the possibility of expansion, is there any plans or thinking about expanding the online business to, for instance, Europe or Asia?
So I think that the rules for running an online business outside the US are very different from the rules running it in Europe. Running it in the US is very different from running it outside of the US. And I think before COVID-19, my own view was that it's not really worthwhile looking at online opportunities outside the US. But today, with COVID and the additional acceleration we've seen through with COVID-19, I think it is an area we will look at. But again, I don't think that it's a super high opportunity short term, but it's one that we need to mature along with other opportunities that we can see out there.
Thank you. And lots of questions coming in from the live stream, but just want to make sure anybody in the room wanting to ask a question. Otherwise, I think we'll just take another one from the live stream. And this is for you, Marianne, on the ERP investments, total CapEx, and how will these be allocated until 2024-25?
Yeah. Good question. So the total investment for the ERP, what we announced last year in our annual report was 280 to 340 million. We are just now refining our plans. I do not expect that number to change significantly, but you should go for the higher part of it. The allocation will be approximately 100 million over the next 3 years. That's as much as I can say now. But when we come to the annual report in March next year, we will have laid out the implementation plan, and thereby also I can be much more precise on the capital allocation over the future years.
And maybe again, Marianne, another question relating to investments. Now the question is on these 2025 retail stores, whether we have the cash reserves already factored in. I think the question is that part of these 1.5 billion that you're mentioning, if we're going to invest in these many stores?
Yeah, these are not part of the 1.5 million, because the 1.5 million that I mentioned was before sizable investments. But we do have such a strong cash flow that implementing, if we decide to implement 20 to 25 new stores during the strategy period, we will have the cash for that. Also without it hurting any shareholder returns or potential for acquisitions.
Perfect, thank you. Anyone here in the room? Yes, Jerry?
Sorry, I've got another M&A question. Could you talk a little bit about the level of competition for whatever assets are available and how that competition has maybe changed in intensity or not over the last couple of years?
Yeah.
I think that the best way to express this is that we see sporadic interest in various acquisition candidates. We try to be extremely disciplined and also patient when we go to this acquisition opportunities, because we still believe that nobody is fundamentally a better owner of any of these assets than we are. So if I am right in the fact that we can operate any cigar business more effectively than any of our competitors, if we are, world-class working capital, or not world-class, but let's say best-in-class working capital within this industry, all of these things make it very difficult to be up against us as a bidder. But at the same time, we also don't want to overpay. We're buying assets in a category with with a risk profile that is different going out. So, we try not to do stupid things, but we certainly don't see a lot of interest in the same type of assets.
Okay, thank you. And I think we are getting close to a conclusion of the day. Unless, yes, Jerry?
Sorry, one more. You've been listed now for over 5 years. You were part of you were held privately or semi-privately before that. Niels, could you talk a little bit about how the culture of the business has changed, how the people have developed, the feeling within the business, all that soft stuff, which is a bit soft for us people, but nevertheless is very, very important?
Yeah, if I understand your question correctly, Jerry, you're basically saying, how has it changed the company becoming public versus the previous ownership? And I think, one of the big changes you experience is that, everyone's attention is on you all the time. And the organization has been somewhat distracted by the fact that even though we don't manage the company quarterly, we do care about each quarter. And my job and the rest of the leadership's job is to make sure we keep our eyes on the long-term success and not, get distracted from the short-term things. I think that we have not had as many changes from becoming listed as we've had from the transformation programs we've implemented. Because going from a decentralized operating model to a global operating model, centralizing a number of things like procurement, strategic planning, all these things have led to more people leaving us because we're running the business in a different way. And we basically, I always say that we've gone from having good people employed to having specialists employed. So it's no longer enough to be a nice individual and good to be around. You now need to be a specialist in lean or in procurement or in IT to be around. So that's some of the changes that we've seen. But I think that the organization is coming nicely together around, let's say, the project. It also helps that we've done well in 2020 and 2021. It raises the whole ambition level from everyone. People can see that the project is doable.
And then I think we have one for you, Regis. That is on innovation in handmade cigars. How much room is there actually for innovation in a category considering FDA and deeming regulation?
Yeah, so the FDA regulations are still deeming, so they're not implemented yet. So at the moment, we can still do all the innovation that we desire. We are prepared because it's all about predicate blending, but the definitions have not been published yet by the FDA. So we're ready, but we'll still also be able to do innovation going forward.
Okay, thank you. And then I think it's for Marianne. STG has a huge surplus cash flow and seems to be under-leveraged. So is it possible to reduce the equity base faster than the current share buyback?
Thank you. Not a surprising question. And as I also said in my presentation, we prefer share buybacks towards dividends, also extraordinary dividends. And yes, I do believe that there is room for increasing our share buyback, at least slightly, and that we will be focused on doing.
Okay, yes, Andre?
Looking at the, let's say, less popular categories in your geographies, let's say handmade in Europe and rest of the world, do you think there is long-term room for them to be developed and become more popular, at least in the handmade?
Sure. I think maybe for you, Regis, and...
Yeah, so when I actually showed you the 3 key pillars that we are driving, so the first one is accelerating handmade cigars. That is not only US, because when you look at it, about 65% of the global consumption of handmade cigars is in the US, but there's still a big bucket outside of US. And we see with also with Graham and availability of our handmade cigars, we are in a very good position when it comes to inventories. So our growth rates at the moment, last year and this year already, are really, really high. Yeah. Hope that answers your question.
Okay, thank you. There are no more questions from the live stream, and I think also we are about the conclusion. So from our part, I would say thank you very much for all the good questions you have addressed, both here in the room but also on the live stream. We sincerely hope that you have got good insight into our company, what we are going for in our ambition to both grow the company but also to continue to create value. So thank you very much for that. Before I will conclude completely, I will just mention that we will have kind of a social component for those of you being present here in London, which is, of course, and here we go, that is a social component where you have the opportunity to talk with the EB members in a more relaxed context. But also, most importantly, we have Sean Williams, our brand ambassador for the Cohiba brand. He will be there for you. Any questions about the craftsmanship of a cigar, there will be a possibility to have a talk with Sean. There will be a possibility to understand kind of the products. As I understand, Sean, you have had your own brands that you have developed over the times. So a true connoisseur in this field. Due to smoking, of course, restrictions, that will be on the terrace just outside the room here to the left. There is a terrace where you can have all the enjoyment of our products. With that, thank you very much for being here. Thank you for participating, and that's it. Thank you.